The 3 best Fidelity funds that builds wealth fast. Beginners need to see this. To be honest, sometimes it feels like Vanguard and Schwab often grab the spotlight, almost as if they're the only names in the investment game. But what if I told you that while everyone's looking one way, smart money is quietly making moves in another? We're talking about a significant shift, over $40 billion flowing into 3 specific Fidelity funds that most investors completely overlook. These aren't just obscure funds. They're hidden gems that have not only outpaced the S&P 500, but also consistently delivered passive income with incredibly low costs. Intrigued? You should be. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. Unveiling Fidelity's Powerhouse funds. In this deep dive, we're going to break down 3 game-changing Fidelity funds, each designed to transform a modest $10,000 investment into something substantially larger. Fidelity, a pillar of trust in investing. When we talk about investing, certain names echo repeatedly: Vanguard, Schwab, and Fidelity. But what truly makes Fidelity worthy of your time, your money, and your long-term trust? Fidelity stands as one of the largest and most respected financial institutions globally, managing over $12 trillion in assets and serving more than 40 million clients. They cater to everyone, from those opening their very first Roth IRA to seasoned investors orchestrating multi-million-dollar portfolios. This isn't a fleeting trend or a fly-by-night robo-advisor. Fidelity brings decades of experience, industry-leading security, and a proven track record of both innovation and performance. What truly distinguishes them? 2 words: investor first. While many brokerages might burden you with hidden fees or offer generic funds, Fidelity has quietly constructed a lineup engineered for genuine growth, including options with 0 expense ratios. That's right, no fees, no gimmicks, just pure compounding potential. And here's the kicker. Most people are completely unaware these funds even exist, too preoccupied with fleeting trends to notice Fidelity playing the long game, and playing it exceptionally well. So if you're committed to building real wealth, desiring passive income without the headaches, and aiming to prevent fees from eroding your gains, you're exactly where you need to be. The 3 funds we're about to unveil are designed to accelerate your money's growth. Fund 1, the Passive Income Powerhouse, Fidelity High Dividend ETF, FDV. First up is FDV, the Fidelity High Dividend ETF. If you've been eyeing dividend legends like SCHD, but crave something with more growth potential simmering beneath the surface, FDV might just be your surprising alternative. FDV is meticulously crafted to deliver high, consistent income through dividends. But here's the genius twist: it doesn't blindly chase yield. Instead, it meticulously targets large and mid-cap U.S. companies boasting robust fundamentals and impressive dividend payouts. This means you're not just receiving income, you're receiving it from financially sound companies with genuine staying power, the kind that weather economic storms. What's inside FDV? Imagine a roster of heavy hitters like Microsoft, JPMorgan Chase, and ExxonMobil, spanning across vital sectors such as technology, energy, healthcare, and finance. This diverse composition allows FDV to seamlessly blend growth potential with reliable cash flow, a rare combination in income-focused ETFs. Let's talk numbers that matter for your investment portfolio. Expense ratio, a mere 0.16%, incredibly low, meaning more of your money stays invested. Dividend yield, around 3.52%, providing a steady stream of income. Dividend growth, an impressive over 16% per year, indicating your income stream is expanding. Share price growth, approximately 8.12% annually since its inception. This is a rare trifecta: solid yield now, rising income later, and capital gains along the way. Think of it as SCHD's sophisticated cousin, potentially offering even more long-term upside for your financial planning. The power of $10,000 with FDV. What if you invested $10,000 into FDV and simply let it ride, allowing the magic of compounding to work? After 5 years, your portfolio could blossom to around $17,000, generating roughly $600 annually in dividends. At 20 years, it might swell to $114,000, paying over $6,300 a year, or about $530 per month. But here's where the story gets truly exciting. At 30 years, with reinvested dividends, your initial $10,000 could explode to nearly $492,000, producing over $36,000 a year in income. That's a remarkable $3,000 per month from just a one-time $10,000 investment. This exemplifies the profound impact of compounding, coupled with consistent dividend growth and capital appreciation, quietly working in your favor. All from a fund with high-quality holdings and minimal fees, perfect for long-term wealth management. Fund 2. The most generous Fidelity Zero Total Market Index Fund, FZROX. Perhaps your primary focus is on eliminating fees entirely, especially for long-term growth. If that resonates with you, the next fund is your perfect match. FZROX, the Fidelity Zero Total Market Index Fund. And yes, that zero isn't merely clever branding. The expense ratio is literally 0%. No fees, no management costs. Nada. This fund diligently tracks the entire U.S. stock market, encompassing everything from colossal companies like Apple and Amazon to the myriad mid- and small-cap companies you might never have heard of, but are quietly delivering substantial returns. What's inside FZROX? Picture a who's who of American innovation: Apple, Microsoft, Nvidia, Amazon, Meta, and countless others. Sector-wise, it naturally leans heavily into technology, healthcare, and consumer discretionary, reflecting the backbone of the U.S. economy. Now, FZROX isn't designed for income. Its dividend yield is modest at just around 1.14%, with dividend growth hovering around 4.4% per year. But that's not its mission. This fund is all about pure capital appreciation, and it delivers. In recent years, FZROX has consistently returned well over 13% annually on share price alone. If FDV offers a balance of income and growth, FZROX is a fee-free rocket ship for long-term wealth accumulation. It's ideal for young investors, those pursuing financial independence and early retirement, FIRE, or anyone aiming to maximize efficiency with zero drag from fees, letting the entire market propel their gains for retirement planning. The journey of $10,000 with FZROX. What happens when you drop $10,000 into FZROX and simply allow time to work its magic? After 5 years, it nearly doubles to $20,000. While dividend income is light, around $216 a year. Remember, growth is the primary objective here. At 20 years, your investment could swell to over $162,000, paying about $2,400 a year in dividends. Reinvested, that's an additional $15,400 plus, quietly compounding behind the scenes. But at 30 years, things truly go ballistic. Your portfolio could hit an astonishing $682,000, with total reinvested dividends now contributing over $81,000 to your growth. Annual income would be around $12,400 a year, translating to about $1,100 per month from just one patient $10,000 investment. This illustrates the incredible power of zero-fee investing when given sufficient time to compound. FZROX wastes not a single cent and harnesses the full force of the U.S. economy to work tirelessly for you, optimizing your investment returns. Fund 3. The Growth Engine, Fidelity MSCI Information Technology Index ETF, FTC. We've explored FDV for steady income and FZROX for pure efficiency. But what if your ambition is to chase explosive, high-octane growth? Then the next ETF is your answer. Let's bring in the heavy artillery. FTEC, the Fidelity MSCI Information Technology Index ETF. This fund isn't here to play defense. FTEC is purpose-built for one thing: pure, unapologetic, tech-fueled growth. If FDV is your income generator and FZROX is your efficient foundation, FTC is your rocket ship to the stars for long-term investing. It meticulously tracks the MSCI USA IMI Information Technology Index, which means it's laser-focused on the biggest, boldest technology companies in the country. We're talking titans like Apple, Microsoft, NVIDIA, Broadcom, Adobe, and over 300 more tech innovators spanning cloud computing, semiconductors, and software, the true engines of the modern economy. Let's talk performance for your equity investments. Dividend yield, a modest 0.5%, with dividend growth around 2.45% per year. But that's not why you invest in FTC. Growth. Over the past decade, FTC has delivered a staggering over 18% annually on share price alone. With nearly 90% exposure to technology, this ETF grants you direct access to transformative themes like artificial intelligence, AI, automation, cloud infrastructure, and cybersecurity, the very forces shaping our future. What truly sets it apart? While many tech funds carry high fees or have limited holdings, FTC offers broad exposure at a bargain, with an expense ratio of just 0.08%. This means more of your hard-earned gains remain in your pocket, where they belong, maximizing your capital gains. The extraordinary ascent of $10,000 with FTC. Now let's witness what happens when you invest $10,000 and let FTC do its thing. By year 5, your portfolio could surge to over $24,000, more than double your initial investment. Dividends are light, around $15 a year. But remember, FTC is built for growth, not income. By year 20, the portfolio could explode to an impressive $340,000, with over $9,900 in reinvested dividends quietly fueling your gains. By year 30, FTEC truly takes off. Your initial $10,000 could snowball into an incredible over $2 million. That's the profound power of 18% compounding. Even dividends begin to become substantial, potentially paying $11,200 a year, or about $930 per month. This is the astounding potential of long-term tech investing. FTEC isn't your income ETF, it's your moonshot. If you firmly believe innovation drives wealth and you're playing for legacy-level results, this is your ticket for significant wealth creation. Your investment journey with Fidelity. So there you have it. FDV for steady income generation and dividend growth. FZROX for zero-fee total market exposure and efficient compounding. FTEC for high-octane, tech-driven growth. 3 distinct Fidelity funds, 3 different strategies, all united by one mission: to grow your wealth faster than most could ever imagine. Important disclaimer. Please remember that investing in the stock market involves inherent risks, and past performance is not indicative of future results. The information provided here is for educational purposes only and should not be considered financial advice. Before making any investment decisions, we strongly recommend that you seek professional advice from a qualified financial advisor who can assess your individual financial situation and goals. If you found this breakdown insightful and are ready to take control of your financial future, make sure to subscribe to our channel for more valuable content. Hit that like button if this video helped clarify your investment options, and comment below with your thoughts or any questions you might have about these Fidelity funds or other investment strategies.